A month after Britain voted to leave the European Union, Boris Johnson was asked if he thought the financial industry would retain its right to free trade in Europe. I do, he told reporters. But it was never that easy. Half a decade later, billions in assets and thousands of jobs have moved to the continent after Britain negotiated a scanty trade deal with the EU that left the financial industry outside. Cities like Amsterdam, Dublin, Frankfurt and Paris, on the other hand, were given the opportunity to bring jobs and trade activities from Great Britain to the mainland. So far, there has not been a clear winner. Most companies and employees are still in the process of finding out which city suits them best in the new reality. Frankfurt, Amsterdam, Paris and Dublin are likely to take over parts of the financial system. Mairead McGuinness, EU Commissioner responsible for financial services, told journalists that in March. The markets will decide and are probably best placed to do that, he said. Great Britain and the EU want to agree at least on the basic rules of the game for the financial world by the end of March. I don't think you can build a financial centre, said Douglas Flint, chairman of UK fund manager Standard Life, Aberdeen. The EU's challenge is to decide where such a centre should be and how it wants to get competing EU countries to hand over activities there. His opinion. That has happened so far, for example, with stock trading. Trading in European stocks, which was previously done in the UK, suddenly shifted to the EU on January 4th. London lost its crown as the leading trading centre in Europe to Amsterdam. As a consolation, Swiss shares have been traded there again since February, which was not possible when Great Britain was still a member of the EU. Great Britain now wants to bring more companies to London through simpler rules for IPOs. Then there's trading swaps. London has long been a global centre for trading interest rate swaps. However, the city's dominance suffered after the EU banned its companies from trading certain benchmark contracts on platforms based in London. Some of that business has moved to Wall Street. And then, of course, there's the clearing of derivatives. The LCH clearinghouse of the London Stock Exchange has agreed with the EU to process European business until June 2022. The EU makes it clear that it expects a shift in the balance of power afterwards. The Bank of England wants to prevent relocations, but I don't see that they will manage to do that. And then there's investment banking. IPOs are another area where London's financial district surpasses its rivals in continental Europe. UK IPOs are on track for a record quarter. Bootmaker Dr. Martens to the Russian discounter Fixed Price have already collected $7.2 billion this year. It's been a good year for M&A bankers so far. Acquisitions by foreign firms in the UK have almost tripled this year to $66 billion, according to data from Bloomberg. Acquisitions of listed UK companies have increased more than sevenfold. However, this could reflect weakness. UK companies have become more attractive takeover targets as their valuations have lagged other major markets over the past year. And then there's jobs and assets. According to a study by EY, financial companies have announced plans to move around 7,600 jobs from the UK to the EU. About 1.3 trillion pounds, that's 1.5 trillion euros, of assets are also moving. Dublin has attracted the largest number of companies that have migrated to the EU. Frankfurt and Paris were popular with larger corporations such as universal banks, investment banks and brokers. And then there's house prices. Tax changes and a comparatively weak economy were arguably the biggest influence on UK house prices. However, Brexit and banker emigration could exacerbate the trend. Since the UK voted to leave the EU, house prices in London have risen 6% compared to 20% in Dublin and 40% in Amsterdam. And so there will not be any solution where there will be forever full equivalence for the UK financial services to the EU, especially if the Johnson government makes true what they always said, they want to diverge from the rules of the EU. And then within 30 days, the equivalence decision is gone. And so we will see more of these shifts in the future. A lot of banks, because of Corona, have waited with actions, and they've waited for the deal. But now with this deal, that doesn't include the financial services. And it is sure that after 18 months, it started in January, in 2022, clearing will go to mainland Europe. It will not be able to do anymore in the UK. And so it has a big impact. And we're talking about much more money than any trade surplus in the trades that will be lost because of that. But what the numbers will be, we'll know in the future. Especially one big date will be June next year, where it will be really interesting. But until then, we'll see a lot of other things happening. And if you want to stay informed, please subscribe to my channel right down there. And I'm going to say, Auf Wiedersehen.